Okay, so let's go ahead and get started. We're going to go over today's session. We're going to go over trading hot runners, basically trading stocks that they're running, whether they're running on news or they're running on, they're being pumped or whatever they're running on. The example we're going to look at today is HUSA, which ran on Friday because oil was popping, and that's one we're going to look at. I actually need to change charts here. Give me 1 second. Sessions chart. Okay. All right. You guys can still see that screen share, correct? It didn't mess anything up. Let me get into our other channel.
I'm still seeing card.
Okay, good deal. Just want to make sure. Sometimes when I switch charts, it messes things up. Okay, so let's go to HUSA. And I need to switch it here. And I'm going to put a couple of moving averages here. Sorry I didn't have this set up. I was running a little bit behind this morning. So we're going to set up a couple of moving averages here. So 1, 2, and let's make this. That's fine. Let's change this to a 20. And let's make it yellow. Apply and OK. All right, so we have the 9 EMA is the kind of blue turquoise line, and the 20 EMA is the yellow. And these are the two EMAs that I like to use whenever I'm trading these hot runners. I also keep a 34 up on there, and sometimes I'll keep a 50, but usually by the time they're hitting the 34 or the 50, they're typically not running as hot. So, a lot of people are saying, hey, what do I need to look for when when I'm watching these stocks that are moving up really quickly? Sometimes they're moving up so quickly, you feel like you don't want to jump in at the top when it's extended, when RSI is high. So a lot of people say, hey, how do I know when to get in? So what we're looking for is these hot runners to pull back to an area of support, and whether that be an area of support that you found on the daily chart or on a higher time frame. A really good area to look for also is the 9 or the 20 EMA. So as you can see, this is HUSA from Friday. As you can see, once it started popping up, once volume started coming in, look how well it held that 9 EMA all the way up. It never even really touched the 20. This is a 1 minute chart, by the way. Oh, it's showing carve? Sorry,
It's
guys.
still showing carve.
All right, that's what I thought. I'm gonna have to reset. I don't know why it does that.
Here we go. It's got it now.
It does? All right,
yeah, it's showing hush now.
Let me just do this just in case. Yeah, sometimes, I don't know what it is, but sometimes when I change over charts, it doesn't grab it. Not sure why. Sorry, Chris. Okay, so as you can see, so this is basically Friday, and this is right after the bell here. It dipped a little bit and then started running up. Oil, I think, on Friday started around, 117 or 118, something like that, and just kind of was creeping up throughout the day. And of course, that got a lot of the oil energy stocks moving. So we're going to use HUSA as an example here. So as you can see, once it started moving, once this volume started coming in after the bell, look how well it held the 9 EMA. It held it very well. And like I said earlier, I know y'all couldn't see, so I'm repeating here. It didn't even go down and touch the 20 EMA. So that blue line is the 9 and the yellow is the 20 once again. So this is what I'm looking for. I'm looking for, and this is a 1 minute chart. At the same time, I'm looking at higher time frame charts as well on another monitor, which is always a good idea to do, especially after it's been running for a while and you can identify some patterns on the higher time frame chart. So a lot of people ask me, hey, how do I know when to get in? Well, this is what I'm looking for. You know, maybe this is something that you guys haven't looked for that you can look for in addition to your other entry signals. But I'm looking for a pullback, right? I don't want to FOMO in at the top, or FOMO in when it's extended, where it could be the top, or FOMO in when it's extended above the 9, like right here. You know, this is way extended above that 9 EMA on this candle here. It's definitely not a candle that you want to get in on, in my opinion, unless you're just trying to do just a really quick scalp on a large burst of volume. But still, it's a little bit risky to do that. I'm looking for a pullback because this 9 EMA is going to act like a magnet, right? So it's going to want to pull that stock back down. As you can see, it does, right? So when it pops up and gets extended here, what happens? Comes back down to that 9 EMA. Same thing here. It popped up on this candle. Look how much extension there we have off of the 9 EMA. It came all the way back down and pulled back to the 9. So had you got in up here on this candle, you would have been red on this pullback. You're much better off waiting for that pullback to happen. Now, you know, if you think, well, it's running so hard, I don't think I'm going to get an opportunity to enter on a pullback to the 9 EMA. So, well, at that point in time, you know, keep in mind, you're still risky. But if you do decide to enter on an extended candle, then I would only enter a partial position, right? Because the likelihood of it pulling back in most cases, you know, we're not talking about every single time, but if you took 100 different cases, most of those cases, it's going to pull back to the 9 EMA, right? So once it's extended like that, especially if RSI is through the roof. So if you enter a partial position, then you're okay if you come back down here, and you know that way your partial position, if it did keep on going up, then at least you have something in it. But you don't have your full position. That way, in the case it does pull back to the 9, you can put in some more shares and get a better average. So those are the things that I'm looking to do. I'm also looking very closely at RSI. You know, when RSI starts getting really high, you know, 70s, 80s, and you know, I've seen them up to 99 and in some cases. When it's that high of RSI and you're extended way above the 9 EMA, that's a big red flag there. I would definitely not touch it when those two components are coupled together. When RSI is through the roof and you're so extended. Now there are some circumstances when you have a big catalyst. You know, if a stock gets an FDA approval, if it's another big catalyst that everybody's been waiting for, and it's really going to give the stock a lot better fundamentals, then that situation might be a little bit different. Those situations, the stock can definitely keep on moving up, and it's going to ignore resistance levels sometimes. It's going to ignore how far it's extended. It's going to ignore RSI. There are cases that that is going to happen, but in most cases, these are the kind of rules that I like to follow, right? And in this case, there wasn't any big catalyst. It was basically HUSA was moving up because oil was moving up. So, but that's what I'm looking for this pullback. If we break back down below the 9, that's fine. Whenever, let's say that I enter a position, let's say I entered here off of this 9 pullback, right? I also like the fact that we had this nice big bottom wick here. So if we entered here off of this 9 pullback, I'm typically at that point putting my stop loss just below the 20. Okay, if you put it just below the 9, you may not get stopped out, but you have obviously a higher risk of getting stopped out than you do putting it below the 20. Now, if you have a stock that's running really, really, really hard on the way up, then the 9 EMA could be way too far from the 20, and then your 20 EMA, your stop loss may not work within your risk management plan. At that point, it may be just too far away, and I've seen that many times where the 9 and the 20 get so far separated that it doesn't make any sense. So at that point, what you might want to do, if there's a huge gap between the 9 and the 20, and you would end up losing too much money if you put your stop loss below the 20, then you want to look at other key areas. So what are some other key areas? Well, let's say that we took this trade here, then maybe we want to look down here where we had some support down here, right? This is where some pretty good volume came in on that candle there, right? And we had a small bottom wick, and that was a pretty nice big green candle. So maybe you put your stop loss, let's say the 20 was way down here, maybe you put your stop loss just below that candle there, right? Or maybe if you entered here, maybe you put your stop loss just below where that bottom wick was, depending on where you got in on this candle, right? If you got in more towards the top of the candle, then you could put your stop loss just below that particular candle's low. Because we obviously saw some buyers come in at that level, and maybe buyers will come in at that level again. And had you put your stop loss there, in this particular case, it would have been a great place for a stop loss because it never came back down and hit that area. Okay, and another thing that happens on these hot runners is when they start to cool down, a lot of times, and this is a good example right here, when they start to cool down, and we can tell that they're cooling down because RSI is going to be cooling off, right? Volume's going to be tapering off some, and we're going to start breaking below the 9 EMA. When that happens, oftentimes you'll see once or twice, or maybe sometimes it pops up there and goes back up, but it'll bounce off of the 20, okay? And this is a pretty good example here. What it did is it came back down, and now, we started getting weaker, right, off of this, the high here, and we had a really nasty sell-off candle there, right? Then we had a doji, and we certainly want to be cautious in watching for those candle formations like that doji. And then when we came back down, we started consolidating and trying to bounce off of that 20. And this is the example that I'm talking about. When these hot runners start to cool off, a lot of times they'll bounce off of that 20. And this is exactly what happened. It wasn't a huge move, but it did bounce off of the 20, and would have been a decent scalp. So, and then then after that, once we broke below the 20, we had a confirmation candle break below the 20. Then, at that point, I'm typically out of the trade, right? As I said before, I like to, keep my stop loss just below the 20 when I'm trading this particular strategy, as long as the 20 is not too far from the 9 at that point. And what happened here as well, something else that we're looking for is now just the opposite of what happened down here. What did we have down here? Well, we had an EMA cross, right? So the 9 actually crossed above the 20 EMA. That's another signal, right? And just with the opposite signal here, we had the 9 breaking below the 20, right? So that's another signal. Some other things that you want to look at the same time that we're looking for, these bounces. So, once that, and maybe that's one of your rules. Maybe you say, well, hey, I'm not necessarily going to put my stop loss just below the 20, but I'm going to just hop out of the trade once the 9 breaks the 20, right? So you would have hopped out here. And then once again, once we started selling off here, then we got another decent candle here. This would have been a little bit of a scary candle, but ended up working out there. We came back up, and over here, again, the 9 broke above the 20. So obviously, you're not trading bounces off of the 9 when the 9 is inversed, when the 20 is trading above the 9. When the 20 is trading above the 9, I'm typically not taking any long trades, right? Unless I see, that it's starting maybe to come back up and it looks like it's going to break through the 20. Then you might want to get in, maybe a little early depending on what your other signals are showing you. So again, we had this break of the 9, break of the 20. The 9 broke the 20 here, and then we started cooking back up again. Wasn't anything near the energy of the move that this was. but there were some scalps there. Okay, so it kind of just pretty much chilled out for the majority of the day, sold off a bunch, and then we had another run in the afternoon, right? So here's the run in the afternoon. Keep in mind this, I'm on Central Time, so this is an hour behind the actual market time. So this actually kind of started running again about 2:45, but kind of getting close to power hour there. It started running again, and same deal here. We had the 9 crossing above the 20. Look at your volume. The volume started coming in, relative volume. So we were basically looking at, prior to that, we were looking at about 1,100 shares, 400 shares. Volume came in on this candle right here. We went from 460 shares traded to 45,373. So obviously buyers are coming in. Something is going to happen in most cases, right? So the volume kept coming in. We start even getting more volume here, 67,000 volume, 78,000 volume. So volume's definitely picking up. The 9 EMA crossed the 20 EMA. So those are all things that you want to look for. Now we came back down here and we actually broke the 9 EMA. But we never did close below the 20. So had you entered somewhere up here and you used my stop loss strategy, which is putting my stop loss just below the 20 EMA, then you would have never gotten stopped out because these candles did not actually break below the 20 EMA. And so we kept cooking on back up. And look at once volume, really bigger volume started coming in, right? This 189,000 here and 250,000 there. Then at that point, we're hot running again. So, in my definition, I don't know any other traders that call it, hot runners, but I call them hot runners when obviously there's a lot of volume coming in and it's holding the 9 EMA for the most part. That's what I call a hot runner. The stocks that are just really ripping up, they're holding the 9 EMA, they have really good, consistent volume. So that's my definition there of these. That's why I'm calling them hot runners. So once we started running hot, again, here we're holding the 9 EMA. So look at how many opportunities you had to hop into a trade off of that 9 EMA bounce. And let's see what our risk was. So let's say that you hopped in on this 9 EMA bounce here, right? And let's say you bought the top of the candle. So you bought 505, okay? When your stop loss would have been maybe right here at 495. I mean, you're risking 10 cents, right? There's not that much there. A 10-cent risk, and you would have made, what, 70 cents or so on that particular trade. So those are the things that I'm looking for. Once we started running hot here again, like I said, lots of opportunities to grab a trade off of that 9 EMA bounce. And we never actually closed below until over in this area after hours, right? I mean, we basically stayed above the 9 EMA until the bell rang. So, okay, that's really all I have on these hot runners. Just a quick recap. I'm keeping an eye on the 9 EMA and the 20 EMA, and those are deciding factors as where I'm going to get in, when I'm going to get into the trade, coupled with volume and RSI, of course, and then where I'm putting my stop loss in most cases. We've actually had a session, I think, similar to this before, but I think this was a good refresher because I think some people may have forgotten, or maybe there's some newer folks in our Discord channel that haven't watched that video, and this will be a nice refresher for them. So I'm going to go ahead and end the recording there, and we will get started with some questions. One moment here.